Kylon, how you doing, man?
Living the dream, man. It's good to see you again.
Yes. For the audience that doesn't know why we're going to be rolling into this conversation like two old friends, because I met you at Rhodium Weekend, the online entrepreneurs conference in Vegas. We were
Yep.
curling a bunch of online entrepreneurs that are sitting in flip flops on ice, all just staring at the bar. That's like so far away yet so close.
Yeah, we made it to that bar pretty quickly. But
Yes, we did. Yeah, like, oh, we done. Okay, perfect. Let's get going.
yeah,
Why don't you just give the audience a little bit of your background? We can dive a little bit into that because I think some of that story is going to lend insight about what you guys are doing at Acquira, and then specifically why you're in the trenches again and why your model works. But yeah, just give us the listeners just the overview real quick.
yeah, man, happy to fill in some gaps there. So my background is kind of all over the place. I got out of the Navy and decided to do entrepreneurship, start a business. So I partnered with a really, really good friend of mine. We started a painting company of all things that expanded pretty quickly. And, we were doing jobs in 6 different states. Throughout the course of that, we built 2 other brick and mortar businesses. And then between 2015 and 2019, I sold all of those, sold the painting company to my partner. And then the 2 of us sold the other 2 brick and mortar businesses to an SBA buyer. And I kind of struck out on my own. I started a podcast called Successful Dropout. I'm a college dropout myself. Never was one for the more traditional path, and really subscribed to kind of our flagship idea. There was this idea of just-in-time learning over just-in-case learning, and this idea that you can go out and set goals as an individual. What is it you want to try out? What is it you want to accomplish? And as long as you have the ability to learn and apply well, you can kind of figure out what the next step is. Action begets more action. Once you take that next step, the next steps become more clear, and you kind of learn as you go, right? And then figure out, and before you know it, you can become pretty good at something versus spending a lot of time learning things that you might never ever put into practice, and you get rusty. It's kind of wasted time and cost, right? So that kind of blew up. We had a pretty successful audience there, and kind of a community
You had a
around.
big following, didn't you?
Yeah, it went really well. It was a lot of fun. Community based around thinking and doing things differently, mostly college-aged kids, and then I eventually transitioned from that to one of the first folks I had on the podcast. His name was Hayden Miyamoto. He was building a portfolio of websites. He was doing M&A in kind of the digital asset space. He called me up. I had him on. He was the first person I ever had on the show. We really hit it off. He called me up a year and a half later and brought me in as the CEO of one of their portfolio companies. And then that eventually morphed into me being part of his founding team, starting Acquira, which is what we can discuss more. But in a nutshell, we help people acquire businesses.
And there's so many things to unpack there. And,
Yeah.
I know both of us, with I'll just say it like this, man. When we chatted and we were sitting in line as like for dinner, and like it was like, oh, you had some challenges with the business that you had, and I dealt with cash flow challenges with the company, the family business I helped turn around, and there was like that check, and then it was like the brick and mortar and services, because you and I were sitting there like real businesses where a lot of these are like website businesses. So it was like, oh my God, there's someone else that actually had like stuff in their business, not just actually a domain, and those challenges led some insight into how you're doing things today. I don't know what level of depth you want to get into, just some of the maybe a couple of challenges as you had those businesses and sold them, and how those learnings are getting applied to today.
Honestly, I think the number one thing I learned is I'd rather skip the whole startup process. Honestly, the idea of building a product or service from scratch, kind of proving the market, understanding your customer, acquisition costs, understand all that stuff can kind of be skipped when you just acquire a business. It feels like cheating. It's almost like you're cutting in line, and it's okay. Right. And so I think when I started working with, it was Wired Investors at the time, was this PE firm acquiring these digital assets. I kind of, that's when the light bulb went off there. And I thought, okay, for the rest of my life, I know I've always wanted to be an entrepreneur. I always want to be running and growing, systematizing businesses. For the rest of my life, I'm just going to buy them and then do that. And so that's been, I think, the biggest takeaway in my entrepreneurial journey over the past 10 years. And yeah, we started out acquiring digital assets. By the time I'd met you, we were actually just making that pivot
It was
to brick
HVAC
and
business,
mortar.
wasn't it?
Yeah, we bought an HVAC business, and now we're into HVAC, plumbing, roofing mostly, and pursuing a bunch more outside of that as well.
So let's there's why let's get into let's pull that thread about why you feel like it's skipping and what is the hardest part about starting a business. And like because like when you're buying a business, a lot of the value building techniques that we teach for the people that own companies also apply when you're buying a business. That's the whole goal, is to grow the value of it too. So I think this applies for everybody, whether they own the company or whether they're going to sell it, the mindset. So like what is it then when you're looking at a business, like what are you skipping across? And then when you start after you acquire that business, what is the intent afterwards, and how are you connecting those dots about the past of that business and then the future of it? Does that make sense? Or
It does. It could go a lot of different ways.
I
I
know,
think
right?
no, I think again, I think when you're starting, it's building that product service from scratch, and then it's finding the customers. I think with the brick and mortar businesses that we have, which are more home services based, it can take. I mean, I built a home services business from scratch. It started out with just my partner and I in a painting van, going out and knocking on doors and getting jobs. And it wasn't until 2 years into it or so that we actually had enough word of mouth from our work to be able to not have to do that anymore. But we still hadn't even focused on marketing, our hiring systems, and our culture and the types of folks that work best on our team. All this was stuff we had to figure out. So it was probably a solid 3-4 years, and also just our niche in the painting space, which ended up being painting large apartment complexes. We just got really, really good at that. But all this stuff took 3-4 years to figure out and settle into, and then we actually had a business that was humming along and doing quite well, right? And so for instance, I just bought this plumbing company in Montana. They've been around since 2000. They've already figured all of that out. They have a pristine reputation in the city they're in. They have a great team, a great brand, a good presence, and really talented people that have been on the team for 5 years plus. A very, very firm foundation has been laid there. And me stepping into that business and taking over ownership, I get to skip all that stuff that that's 3-4 years of my time kind of proving something that I don't have to worry about. Now, what I'm focused on is how can we optimize that business and grow it, right? And we can get into the weeds a little bit on that.
Yeah, I definitely want to get in the weeds in that. And I think, that phase that you just talked about, and I'm curious, from your own perspective, when you had your businesses and the ones that you vet out and that you're looking at, I swear on my life that how miserable that part is, because we went through that with our Kona, this current business. I remember when I read Walker Diablo's Buy Then Build, and first sentence was never start a business again. I was like, yeah, touche. I think those challenges, Kylon, is where the entrepreneur founder is saying, this is my baby, because that pain was so real. To get to even, a few $100,000 in cash flow, like, are we even in EBITDA territory here? Right? And it's like, oh, now I actually have something more than a job, but all of that is what it took to even have something a little bit more than a job. And so there's so much personal identity and like pain that is tied to that organization versus when you're jumping right into cash flow, you're not tied to the systems and processes and people because you didn't build it. So like, how do you see that? I mean, as part of the process?
No, it's a really good point. I think on one hand, on one side of the coin, it's valuable because I'm already finding, coming from outside of the business, I have a very objective view on things, and I'm not preconditioned to approach things in a certain way like the sellers are. So I'm really able to think outside of the box and bring some new and fresh ideas to the table. So that's an advantage, right? The disadvantage is you have to learn that history of the business, right? They're doing things the way they're doing them now because they have for years. Why is that? One of the misconceptions I see a lot with new buyers is they feel, and I see this going around on Twitter and everything, this idea that, oh, you can just acquire this 7-figure HVAC or plumbing company and use an SBA loan and put $100,000-$200,000 cash down. You're getting over 100% cash returns, assuming the business doesn't grow, doesn't decline. And now you can just go chill on a beach and, check in, or hire a GM and then check in with them once a week, and all is good. And it's just, it's not the case at all.
Why not? Why? Let's pull that.
I would say partly several things here too. Partly the size of the business, right? The businesses we're typically acquiring are in that sort of $1 to $5 million total purchase price or enterprise range, and so you're looking at anywhere from 300 to 1.5 million per year in EBITDA.
What kind of revenue for the because I'm familiar with those industries that you're talking about, but how does that translate to people?
I mean, you're
revenue?
doing anywhere from on the smaller end, you're doing $1 million in revenue to, on the higher end, 10 to 15 million. And people wise, to crew of 4 to crew of 20, 25.
Yeah, that makes sense.
Something like that. So I think the misconception is you're going to step in, you are going to do a massive overhaul on systems immediately, especially experienced people. They'll take a look at these businesses and you'll see that are not being done correctly or that can be optimized, or growth opportunities. And a lot of people think they're going to step in and they're going to completely overhaul the software system. They're going to fire underperformers. They're going to do all this stuff. And it's just not the case. What we encourage folks to do, and what I'm currently doing, literally, I'm just spending the first 3 to 6 months in the business, understanding how it's been operating for the past decade. Right. Mm-hmm. Next week, I'm going to be a CSR for a few days. Our current CSR, customer service representative, she's going on vacation. So I'm going to step in, I'm going to pick up the phones. That's awesome. The week after, I'm going to be riding in the trucks with the guys. And we're making improvements, but they're small incremental changes that aren't complete overhauls. And they're increasing the quality of life of folks. Like a specific example is when we stepped into this business, we noticed one of their systems was the guys would go to the job, and then you have the service manager who's in the office, and they're also understanding the invoicing and what jobs are being done that day. And the techs are going to the job, they do that, they come back at the office at the end of the day, and they were handwriting all the jobs they went to and everything that was done and all the parts they used and everything at the end of the day. So it's a bunch of time for them to come back to the office to write all that out
and then remember it.
And then remember it all, right? Yeah. And and it's a pain in the butt for everyone. And it also means the guy in the office has to be there typically till 7, 8 p.m., right? So we came in and we built a quick Airtable form, right? Where the guys just fill it out right when the job's done. It zaps to the office and everything's right there. So made everybody's lives easier, more efficient, but we didn't implement, Service Titan, for example, is one of these staple softwares in home services. We're in the process of implementing that, but we've now owned the business for 8 months, or been involved there for 8 months. And so that's a complete overhaul, but it's going to take probably another couple of months to really get that up to speed. Mm-hmm. And
I think you bring up a lot of it. I think you bring up this. It's such a huge point, because this is where I had someone on the show recently that was a search fund, and they had run a company. They were an EO, then they raised a fund, and now it's an owner operator plus a bunch of equity behind them. And that whole, like, the SBA slap this, go buy it with a bunch of leverage and then just do the stuff you talk about. I think, you're seeing like literally Instagram ads and like ads like, hey, you can just do this real quick, zero money down. It's like, it's so ridiculous. And it's for the people that listen in that own companies. They're getting inquiries from PE firms, from investment bankers, from brokers, from people like your audience and the people that you train. I mean, so it's so hard for them to discern what is the difference with all these inquiries all the time, unless they have a foundation of knowledge. And so let's talk a little bit about, what does Acquira do? How do you guys do it? And what is your model? And how is that different from a search fund or someone that's, like you said, with a different model? And then I want to talk about then that whole overall model, how you view opportunities and the right, there's a lot of stuff we can unpack after that.
Mm-hmm. Yeah. So what Acquira is, if I had to describe it in 2 bullet points, bullet point 1 would be that we are an investment fund for people looking to buy small businesses. And bullet point number 2, I would say, is that we're an accelerator for folks looking to buy small businesses. So if folks out there are familiar with the concept of Y Combinator and what they do for startup entrepreneurs, same thing, but for acquisition entrepreneurs. There's a lot of individuals out there. Our typical profile is someone kind of 40 to maybe 55, 60 years old, already pretty successful in their own right, usually come from the corporate world or more traditional assets that they've invested in, stocks, bonds, real estate. And now they're looking to either diversify or most often just gain more freedom by owning their own business. And now with the wave of baby boomers retiring and a lot of businesses starting to come on the market, there's supply there. But these folks often lack kind of the capital and sometimes the experience. There's a lot of, I think, wannabe buyers out there, not a lot of qualified buyers. And so that's where we come in. And so these individuals, they work with Acquira, they come into our ecosystem, and what we provide is structured guidance and training, accountability, vendors. Basically, we have an ecosystem that is, a good way to describe it is an acquisition in a box type environment that gives you a lot of time and cost efficiencies with the acquisition process. It kind of fills in the gaps. In addition to that, then we're investing in these businesses ourselves. So, we've done over 22 acquisitions. We're acquiring more. We have a lot of experience there. And so if these acquisition entrepreneurs want us to, we're open to taking a minority position in the business, which aligns our incentives from day one. And then the value we provide is post-acquisition. We can act like a board of directors and help them with systematizing and growing the business. So again, we can bring to the table actual documented systems for all these different zones that make up your business, from HR to capital allocation. And then we can bring vendors to the table as well as then community. Right now we have several partners that we own HVAC and plumbing and roofing businesses with. So in the last 6 months, we've had 2 workshops we've hosted where these folks get together at one of their business locations and kind of share best practices and learn from each other and grow in that way. So that's kind of a high level overview of what we do and who we help. Yeah.
And I think I'll give some color to why I think that what you're doing and how you're fitting into the market is super necessary, is because the things that I see with the people that go through, we've had hundreds of people go through our training in the last 18 months. And there's this, I call it, like, I've got a bunch of different names for it, but like, there's like this massive void, Kylon, where like between, call it 400 or 500 grand in EBITDA and 2 million, where they're real businesses with real people doing real things for real customers. And it's right. And then, but when you actually look at the overall like structure of options for them to be able to either finance their growth or even have an exit that is adhering to their values and to the financial freedom that they need. Like if you go, okay, like, well, if you're, let's say you're easy numbers, 1 million in EBITDA, it's 3-4 times, that's 4 million, pay off your taxes and debt. And someone walks away with a couple million, like, oh my God, I thought this was going to be way more than that. And to go from 1 million to 2, commercial banks aren't going to go give you a bunch of, money, or they're going to you're going to get laden with debt, and you can't then reinvest. And then PE firms and ESOPs, they like the 1 million to 2 million. So like in order to have the real options with real things, you have to go above, or you're stuck in this broker-ish world where someone can't afford to like buy a business with an SBA and then reinvest, or there's just so many inefficiencies with this marketplace that you're working in that it just is really painful for people.
Yeah. And I think that's what I'd like to do, is be a large part of that long-term solution and consolidation that I think you'll see in this space. I mean, even just brokers, man, I could go on and on about brokers.
Trust me, man. I mean, I literally was like, okay, so there's a client of ours, let's say it's 11 million in revenue, 70 million or 70 employees, 1.2 in EBITDA. It's worth $5.5 million bucks. And you're like, they're going to list that with a broker on a website?
Yeah.
Like seriously, like that's 70 people's jobs and someone's 30 years worth of work. And this isn't that all brokers are bad. I mean, there's the people out there that are,
but they're not all created equal.
But not at all. And it's way different. I mean, so different than investment bankers. And it's the same thing with like even the funding in a bank, because if you're like, okay, if I need to go from $500,000 to $1 million in EBITDA, I need to reinvest, and they don't have the cash flow without cutting their salary that they need. So there's like this true like constraint in cash flow. And that's why when I am looping this all the way back, when you're talking about the SBA, I looked at this deal with a client where it was like $1 million plumbing business or electrician business. And the person wanted to do what you were saying, is like go in and hire a GM, but like the master What's the master electrician?
Yeah.
Yeah, that license was
That
with the owner.
the license they're operating under. Yeah.
Right. So then you go, okay,
Mhm.
well, in order for it all to work, that person has to go get their $130,000 and be the master electrician and pay the debt in order to have like 60 grand a year to reinvest. And that's just not enough to make it all work. And then if you were to hire a master electrician, you're literally buying a $1 million business with like $3,000 a month in cash. Like, why do that?
Right. Right. Yeah. And so I ideally, if you can retain that owner somehow. It's not always possible with an SBA loan, but there's like this plumbing company I just bought. That the structure there is I own 80% of the business, but that owner now owns 20%. He retained 20% basically. So we're still operating under his license, and we've got guys on our team that over the next 2-3 years they will get that master license as well, and then we'll be incentivizing them to kind of take over and continue to operate under the business that way.
What type of people are going to you guys in Acquira? And then are you vetting out their skills, and what are things to be aware of like what's a good owner operator as a potential buyer, what's not? And then what does the capital structure look like when they're going in, and how does that second phase look like with you guys, and what are other ways that you've seen people structure that don't work?
Okay, so first question, the types of folks that we
Yep.
attract and kind of how we screen them. We're looking for, again, I think that background and experience in business, finance, or management is kind of a given if you're going to be acquiring a business that has real people and has been around for decades. So obviously we look for that. The other thing we're looking for are, I would say, it's a certain drive that comes from this entrepreneurship mentality, this forward tilt to just sort of lean into things and figure it out and learn and
Would you say
apply
just in time
well.
learning, right?
Just in time learning. Yeah. We're looking for people that are humble, I would say, as well. And the main way we screen for this, we have a program that we call the gauntlet, and it's called the gauntlet because we make everybody go through it before they're allowed into our ecosystem as buyers. Because we do want to screen them for these things. Basically, we give them a bunch of exercises analyzing a mock deal that we have already
Oh, super cool.
closed on, and then and this allows us to understand, how do they think creatively, how do they think critically. It also includes a couple hours of phone calls with our team, so we can, just like this, face to face, so we can get to know them in person and kind of figure out who they are as a person. But yeah, I'd say the folks that do well are the folks that they learn and apply well. They've got that drive, because you're looking at a multi-month process. I mean, typically it's 6 to 9 months. Day one, looking to source a business, to actually closing on it. It's kind of where I set folks' expectations. And honestly, I'd say the other thing too is just people with high EQ. At the end of it, all the businesses, it's a bunch of people, and these sellers are real people too. They have certain values, they have a certain culture in their business. And so we need to work with buyers that are even keeled, that are looking to seek first to understand before being understood, looking for win-wins, and that are overall emotionally intelligent and willing to kind of get to know the people of the business. So that's who does well with us.
And that is such a stark contrast, Kylon, compared to, like, if you were to go to the search funds that are just popping up everywhere. We have these Ivy Leaguers coming out of school, spreadsheet junkies. They have all of their friends that they went to school with that all have connections to family offices and big pools of capital. So then they go on a hunt for a company for 1 to 2 years. They spin up a website. They spend all the money, driving out the emails and the phone calls. So the big difference that you just said, you mentioned EQ, people, humble, versus looking at spreadsheets and like going, hey,
Yeah.
like we can consolidate all the HVAC companies in the US, and then, and then look at this spreadsheet, it all goes straight line up, and
It's exactly. And I'll tell you, like, I've seen time and time again, our buyers beat out offers from these larger private equity firms or search funds or capital firms that are even offering above asking price, but they're going to kind of nickel and dime them to death on post LOI and question all the ad backs and everything. And there's somebody real might come to the business from that firm, but it's a junior employee or somebody who's kind of just in charge of diligence or something. Where our buyers are, they're very approachable, real people that are looking to relocate their family in most instances. Most of our buyers are looking for businesses in their entire state or states surrounding them. But we're very intent on telling them, look, if you buy something that says, well, we have one of our acquisition entrepreneurs, he lives in the Bay Area. I'll give you a real example. And we bought this HVAC company with him in Phoenix, Arizona. And he moved there. He was staying there 3 months or 3 weeks out of every month, and really entrenched himself in the business. So these people are looking to make this their baby, essentially.
It's a huge point. And like when you guys are aligning the type of quality people you're talking about with the sellers. So speak a little bit about the sellers. Where are they finding you? Why would they pick you guys over others? And what does that overall process look like with the sellers?
We're pretty good. So there's if you're talking about sourcing, like there's kind of two buckets there. There's on market through brokers. There's off market. Without brokers, we do a lot of both. When it comes to sellers finding us, this is through, we're pretty good at digital marketing. So we have funnels set up. If you Google, what's my business worth, we might pop up right now. And you'd punch in some information about your business. We'd spit out kind of an auto calculated valuation. Then our team's going to follow up with you. The advantage to then working with our pool of qualified buyers is that you're not going to be charged brokerage, which you would with if you worked with a traditional broker. Instead, our buyers pay a small percentage brokerage to us for bringing them that deal and kind of connecting them.
That's interesting.
So
that's a unique model.
Yeah, I think that's a big one for sellers. The other one is, like, again, I'll just say the buyers that we have in our ecosystem, they're good people. We vet them through our core values. Our core values are serve. It's systematic excellence, empowered stewardship, respect and integrity, energizing lives. And again, we're looking for these folks that they're good people, right? They're not assholes. We enjoy working with them, and so that's something else we've seen time and time again. They're also educated. Like, we're giving these buyers the tools to really approach the acquisition process well, and we don't teach people to kind of take advantage of
malicious tactics, right?
Exactly. It's always been a win-win, right?
It makes you feel good, right? It's like, you're not teaching people how to go around. I just did a podcast with my business partner about what to do when you get an out of the blue offer, because it's like, God, your chances of just getting hosed are so high. It's just absurd. And there was a gentleman. Go ahead.
No, I was just agreeing. Yeah.
You talked about the sellers where this is their baby, and you're handing it off to someone else that's going to care about it just like that. It's not just this get rich quick wealth creation mode, which people are going to get disappointed once that happens anyways. Let's talk about valuations and how you guys value businesses. Okay. So let's talk about it as the buyer side. When you're looking at good deals, what does that look like? And then also, what do you plan on doing? Like, valuation, what's your opinions on valuations, and then how to enhance value?
We're typically looking, again, for these smaller businesses. We usually start with comps. We're calling brokers. We're looking at websites like BizBuySell that have a lot of this data and understanding what's kind of the typical price for a plumbing company in the US, right? Which is about a 2.6 multiple, which is typically, that starts on the low side. I'd say that's quite low. If you were to ask me now, and the brokers I've talked to, the deals we've done, you're looking at more like 3 to 3.5 or so. So that's always a starting place. I think the business certainly becomes more valuable as you realize the more turnkey it is. And obviously the larger the cash flow as well. At the end of the day, though, with our buyers, it's always come down to the price is what the buyer and seller agree on. But it's right in that sort of 2.5 to, I'd say, 4 multiple for the home services businesses we're looking at, again, in that sort of $300K to $1 million price range. So
the definition of some of the risk factors that you would look at from a buyer's perspective, on the other side of that same coin, are the same things that you would do to enhance the value. So when you're
so I guess one example. So when we teach our buyers to do initial kind of pre-LOI diligence, we have a bit of a template that we break every deal down. It applies to almost any industry, but we're looking at pretty typical things like the customer and sales concentration, or the earnings and revenue trend, things like that. And obviously, if you've got 30% of your revenue coming from a single customer, that's a pretty big red flag and might constitute a bit of a lower purchase price, or maybe you work something directly into the deal structure to mitigate against that, like an earnout.
Mm-hmm. Yeah, that makes sense. Yeah, and so the things that you do this, because you got this whole ecosystem, like you said, of vendors, and just like even that intake form, like you were talking about, like what is let's say someone buys a business, and before I even go into that, like what percentage of the sellers actually roll or keep some of their equity versus like a complete handoff?
The issue is SBA there. If we're approaching the deal with SBA, right, you can't retain that. Otherwise, I would say the majority of sellers are interested in that. And there's some creative workarounds there, but again, we also have done deals without SBA. Like the deal I've just done now, it's 70% seller finance, seller retain 20%. We put 10% down, and that's just a really neat win-win. I think, again, in this case, the seller it also depends on the seller's motivations, right? That you've got a lot of sellers looking to retire. Some, like in my case, this guy is 42, 43 years old. He's not ready to retire yet, and he still really likes the business. The thing was double the size a couple of years ago. He grew it, decided he hated it, hated the whole business administrative side of things, and didn't really know what was going on. So he fired a bunch of folks and went back to kind of a skeleton crew. And he just really likes training the guys and out there with the crew, kind of turning a wrench. And so when we came on, it was a real win-win in that he doesn't want to see the business grow. He just wants no part of it, but he's willing to keep equity, not ready to retire, and wants to participate in that growth. And I think most sellers are open to that. Just with SBA specifically, that can be difficult. There are some workarounds, though.
And the reason I asked that was super helpful is that, like, I think when you have two different views of what the future of the business could look like, especially when you have two people now that view the same baby as theirs and are not spouses. So, like, how do you reconcile that view if they've got rolled equity or they've maintained some of it? Because you now are going to go in there and professionalize it. Like you said, like your systems that you're bringing to the table are professionalized because that's what you're going to do to scale the business. How do you approach that topic?
This is why we look for buyers that are high EQ and that are just good people to be around and humble, because that's what it takes, man. Like you're building a relationship. Like, again, I can really speak to the what I'm in the trenches with right now. And these folks are my partners now. It's the seller and his wife, and they still work actually full time in the business. She's a CSR, and he does all the training and is kind of the service manager in the business. I stepped in 2 weeks ago. We'll see as time goes on, but the relationship is still very, very good. But I find it pretty, like, it's not hard for me to make friends or understand other people's point of view, be empathetic. And I am, what are some of the things I'm doing? I'm extremely communicative. We have a weekly call, and I'm a big fan of EOS, the Entrepreneurial Operating System, Gino Wickman. And so I've started to implement that into the business as well, to give us some structure, and once a week forum to kind of talk about issues and goals. And I'm very clear, here's what I'm doing this week, here's what I did last week, out of the things I was doing last week, here's what I got done, here's what I didn't get done, here are the things we need to discuss. I'm always asking their opinion on things. I'm being extremely respectful and humble, I guess you could say.
No, that nailed it, I think, Kylon, because, like, let's talk about some examples of where that rub would happen if someone wasn't empathetic.
Well, I mean, so it happened literally today. Our biggest barrier to growth right now is talent. It's finding good techs to jump in vans and go serve our customers. And so one of the ideas that I've had is I'm talking to a lot of these young guys that they think they might want to be plumbers, but aren't quite sure. It takes a lot for us and a lot of investment to work and bring on an apprentice plumber to our team, sometimes to $20,000-$30,000 before they actually start bringing the company in money. And so one of the ideas that I've had is, well, let's just advertise ride-alongs. Right? Let's get these guys. If you're interested in being a plumber and you're some high school kid, come cool. And ride in the van once a week. Work for free, but we'll throw you into it, and you can kind of see what it's all about and kind of shadow us on the job, right? And I've got one guy who's a great fit who wants to do this next Monday, Tuesday, and so I've been working on this on kind of the side. Today I called Lance, the owner, and kind of talked him through this, and immediately his defense went up a bit because one, it's just kind of a new idea, mm-hmm. but two, he's a little bit scared of us growing too fast. But he's also a good person himself in that he was like, look, I know this is kind of your thing now. I know this is your decision. I'll leave it up to you. But then on mine, I'm saying like, hey, man, like this is your business. You know this better than I do. I want your sign off on this. I want your opinion. And I had been initially, for instance, thinking we'll pay these guys kind of minimum wage. I want to be fair. He was like, no, I think we should have them do this for free. This is how I've onboarded a couple of guys. If I went and worked for another company or shadowed them for a day, this is what I would expect. We found a middle ground there, basically, and everything is great. So, like, I guess I could have put my foot down and said, like, no, this is the way I want to do it, and I don't think it would have worked out as well. There's always that
it's
give
a
and take.
Competition of ideas, right? Like, I mean, people get protective over their ideas. I mean, if you think about the conflict that happens inside of management meetings and team meetings all day long, it's just competition for ideas and opinions. And like you talk about being humble, and like, I don't know if you and I go ahead.
There was one more example I thought of that was just a couple of days ago, right? Like, my other idea for bringing more talent, there's probably 60 other plumbing companies in the area, except the majority of these they're like one man in a van, maybe two men in a van type companies, father, son, something like that. But starting to talk to, there's several of these guys I've been starting to talk to, and they could be very interested in being absorbed by our business, earning a little bit more, maybe starting a division of the business, so they can still be an owner, but we take care of all the back end administrative stuff, right? Then again, this is something I didn't just go out and do. I brought it to the owners in our level 10, meeting this last Monday. And, he just said, look, I think it's a good idea. I'm all for that. I could point you to some people, but he's like, this is still so new. You stepping in here. He's like, what I really love is over the next 9 months to a year, let's see how this goes, basically. And if things are steady and consistent, and this is a good relationship, he's like, then I feel really good about talking to these other plumbers in the city that I've known for years and bringing them on board. He wants to know this is a sure thing, right? And so that's like this. It's just a very honest conversation, man. Like, he's still not sure about me, and I'm still vetting him out too, and we're still figuring out this partnership. And so it's this constant conversation, give and take. It's like being married.
It's about being on a good team, right? I mean, like, and I think you said it already, is that a business is full of a bunch of people, right? Like, if it's kicking out $1 million, it's a bunch of people organizing things to make that $1 million. And like, that's what I think. So like, in our 5 principles, which is our intentional growth training, the first one is your drivers. And it's, what the hell do you want from your business and why? Not the money. Yeah. The money is the second principle. And the reason, Kylon, is like, I mean, Bo Burlingham wrote this book, Finish Big, and it's all about like, what do you want from this? Because it's your people and your community and all, like, and people get so infatuated with that number, and they don't realize that most of the time they're going to have to work for the buyer for some period of time, and all of the reputation's wrapped into this thing, and they just only concentrate on the number. And then all the stuff that you're talking about, how you handle that, is where everybody quits during the earnout. They get so miserable. The stress, and just, I have felt it, I've lived it. And it just, people don't value that enough. And the fact that these buyers kind of we're just going to roll these up. And I'm like, hey, there's a bunch of people, right? Like, you can roll a bunch of those spreadsheets together, but you have to have a bunch of team meetings where people like each other to actually deliver the goods and services to the customer.
No, it's true, man. I wish people focused on that a little bit more, both buyers and sellers. Like if you're a business owner, or a seller, like I wish, if you're talking to buyers, I would encourage folks to focus on that communication, that relationship, in addition to the numbers and the deal structure and how that's all going to work. But you want to have the best deals I've seen, and deals that really come together well. Everybody in that transaction, they walk away happy. First of all, like it's a win-win transaction, but then there's a relationship as well there, and almost to the point where at the end of the day that the relationship comes, first. And that's kind of what I've developed with these, the seller in this business, and it's working out really well. And it's the same thing with, you can't forget about like in my case, the techs. Like they're the lifeblood of the business. That's where our revenue comes from. And so, I've already been out till 3 a.m., having beers with a couple of them.
Yeah.
And
Yeah.
I could make this executive decision for this new guy to come do this ride along. I know exactly the tech I wanted to ride along with, because I trust him to vet the guy and tell me if he's a good fit. I could have just set it up, and the guy would show up, and all of a sudden he'd have a stranger in his van. But I called him and just looped him into the decision and said, hey, what do you think about this? I respect your opinion. So it I don't know, it doesn't take much, man, but it's these little kind of this human element, these touch points, and being a humble person that I've just seen time and time again. It's the key. It just goes a long ways.
Did you and I talk about this book? I'm holding up, Conscious Capitalism. I don't know
We
if you
did. I still haven't read it.
What?
Were you mentioning it? I know.
Just in time learning. It wasn't applicable yet. The reason I bring that up is like the ability to make wealth owning a business is huge. But you cannot expedite trust with all your stakeholders. And I think about what you're doing. It's just like, I'm under the belief, Kylon, I'm curious of like when you're looking at all the buyers and sellers and transactions, I'm under the belief that a lot of the sellers in the size companies that you're working with, they didn't want to be a business owner, private equity owner, right? Like they want their craft or their enjoyment or their community or what. Like there's all these fun things, and there's cash flow, but they never really thought of their business as an asset until, okay, now I need to retire. Then I kind of realized, oh, I have to like get this whole different mindset. I swear on my life that 2/3 of business owners that currently quote unquote want to get out, they just want to hand that pile of shit of operational administrative stuff off, but they would probably still work 20 to 30 hours or whatever, so that they could still have a paycheck to some degree and enjoy the community. Because another reason that Bo Brillingham talks about why some people are miserable is that they're out, their baby's gone, and their whole life, their emotional like surgery of their identity is removed. Where like you could have that be a gradual process that could be enjoyable if people found people like you that were buying, versus some miserable, like it's just about the cash and I need to like have a 18-month therapy session.
Mm-hmm. And you'd be surprised, a lot of these folks see through that. Like again, I'm looking for more acquisitions in the area, and so I've started talking to some of these sellers, and it's actually pretty amazing in terms of plumbing companies in this area. It literally, like since January 2021, they've just been inundated with private equity firms and offers, like just like that all of a sudden. And I see it. We don't have to get too granular, but private equity is hitting the home services space hard. We saw it with HVAC first, and multiples expanded in like a 9-month period, and now I see it's starting to move to plumbing, electrical,
painting, lawn care. I've watched it here in the Twin Cities too.
Yeah, I mean, it's just roofing will be a big one. But these sellers are, again, these guys have built this thing, blood, sweat, and tears, for 3 decades. They love the craft, and they're really turned off by some of these. And I've had them send me some of the offers, and it's a deck, right, on here's our values and our 20-year vision, and all kind of what you talked about earlier, all this sort of high level kind of top down stuff. And then usually the offer has some sort of maybe equity in the larger roll up they're doing or something. And these guys, it doesn't really appeal to them at all. Oftentimes it's so complex, they don't even care to try to understand it. And so what I've seen time and time again is these individual buyers approaching these sellers, and you just develop that relationship, and that's what pulls a successful deal together.
Well, I think about, like, I mean, you're in the services business. I mean, like you need the techs to like to wake up and go to work so you can make money. Everybody can make money. Like, you
Mhm.
need everybody happy too. What are some of the things that you're seeing on in the marketplace? I mean, you mentioned the private equity. I'm seeing the same thing on all sides of the market. Big companies. I mean, it's just ridiculous, Colin. I mean, like I go, okay, well, this I don't know who's going to make these returns at some point, but what else are you seeing as far as activity and industries?
I just see a lot of like early stage consolidation. Again, I can really speak to home services the most, which is
Mhm.
tons of different industries, but I see a lot of early stage consolidation there, as in these larger firms are rolling up, starting to roll up these businesses, but I think it's early on in the process. So yeah, they're projecting 3, 4, 5 to maybe 10 years down the road the type of returns, but I don't know, man. Stepping into one of these, just myself as an individual, and then having been part of that world where, okay, we're going to roll up, 300 companies in 3 years and apply this sort of blanket operating system, and have all these kind of KPIs, and have hire all these GMs, and take things to the next level. It's so different when you're actually boots on the ground, dealing face to face with these folks. And so what I'm trying to take as I do more acquisitions is more of this bottom up approach. I'm really, really interested in, again, getting in the vans, like getting on the phone and understanding what actually matters to these folks. And let's build a systemization and a growth strategy based on that. And I think what I'm going to find out is it's going to take, twice as long as
And twice as
you'd think,
expensive.
and twice, yeah, most likely. So
What well, I
go
was gonna
ahead.
say, I don't know a ton about the overall structure of Acquira, but like, if there's no hold time that you have to sell everything by, you can do that, right? I mean, I don't know if there's
Yeah,
limitations that you guys have on that, or
no, we kind of leave that up to the buyer. We have some buyers that do want to approach this PE firm style and buy something and value add over a few years and sell, and that can certainly work. But we do have a surprising amount of folks that they do want this to be a long-term hold. A lot of our buyers are thinking about that, building a generational wealth and something that they can pass on to their family
mm-hmm,
members. And that's my approach as well. And
mm-hmm.
yeah, I think when you have that long-term mentality, you have a little bit more of a patient approach to this stuff for sure.
What do you think is gonna happen, man? I don't know if you and I talked about these stats, but just to kind of set the groundwork for a second, is and this is from the U.S. Census Bureau, and they're coming out with one soon again, I think. But there's 27 million companies, 21 million of them are freelance, no employees. So there's 6 million privately held companies in the U.S. that employ collectively 120 million people, and then of that, there's only 20,000 that are over 100 million in revenue. And then there's, yeah, isn't that crazy? And then so if you've got $100 million business, you're literally in the 0.01% of successful entrepreneurs. But
Nice.
then between 5 million in revenue and 100 million in revenue, there's 300,000 companies.
Mhm.
And then there's 5.6 million or whatever the delta is underneath 5 million in revenue. And so, like,
Yep.
when I look at that just from a pure macro economic perspective, Colin, I'm like, so you take the $3 million company and you go, okay, well, you're already in the whatever percent because you have a business, and you're going, well, there's not enough EBITDA there. There's the wealth. Everybody talks about this tidal wave of baby boomers, $10 trillion. I'm like, these are a bunch of people with jobs that, like, unless they find the right person like you, or the right person that has an SBA loan, like, what in the hell is going to happen to these companies? Because there's not enough PE firms. The PE firms can't do it for all the reasons you said. They can't hover around in a boardroom because they're going to
Right.
have to do what the style that you're doing. I don't see enough people doing what you're doing to be able to facilitate that transfer.
Yeah, I think that's what and see, I'm probably I have a bit of a different perspective here, because that's all I deal with every day is the types of folks that do want to do that.
Mm-hmm.
That's why I think you're going to
That's
see
a good thing, then, I
more.
guess. There's a lot of
No,
people
it
out there.
is. Yeah. I, and what I'm finding, there are a lot of people out there that want to acquire these businesses, and then it's definitely fewer of them that understand how messy and complex it can be, and have that entrepreneurial drive to still do it. But there's definitely more out there than I thought. And as Acquira grows and we get more people in our community, I'm seeing like I did a presentation maybe over a year ago called the $10 trillion opportunity, business buying opportunity that nobody is talking about, kind of alluding to, there's roughly $10 trillion in small business assets that will be switching hands over the next decade or so. A lot of studies show, and I can't truthfully put anything out with that title anymore because there's a lot of people talking about it. I think what we're missing is just buyer education, which is what we're up to. And then I think you're going to see more people kind of like Acquira, like the Roland Frasers out there, Walker Dybels, these are great guys, great teachers, emerge because I think we're starting to hit this critical mass of people interested in business buying, but they need a little bit more perspective and guidance on the process and what it all entails.
Sign a bunch of personal guarantees and pay a bunch of money for a big mess. A lot of opportunity. Yeah. I mean, it's all joking aside. I mean, it's a great opportunity. Like you said, it's not all sunshine and roses every day.
It's true, but I guess I've never, I don't know, maybe some other people have a different experience. I've never experienced anything where I can expect to get outrageous returns for something that's really easy or not a lot of work, right? That's always the case. It's sort of this pick your is it something Manson? He wrote the book The Subtle Art of Not Giving a F. I don't know if you want. I don't know. His whole thing is like, what pain do you want in life? Right? There's a lot of pain and suffering in life, and if you think about your career path and the thing that you want to pursue in terms of what is the kind of pain and kind of messiness that you are happy to put up with, I think that that can give you a little bit more perspective on your direction, aside from just thinking thinking about more of the benefits and the kind of pleasure side of it.
Yeah. Well, it goes in as we're rounding out here is intentional, right? Like, I mean, it's about putting the stuff in front of you that is going to make a difference that you enjoy. So, like, I always ask two questions. What does the word intentional mean to you?
What does the word intentional mean to me? It's beginning with the end in mind for me. It's understanding, it's kind of this EOS approach. Like, this is what I'm doing with the business currently. It's understanding where do we want to be in 10 years? And then let's work backwards. So what does that mean we have to be in 3 years? And where does that mean we have to be in 1 year? And where does that mean we have to be this quarter, this month, this week? And then what do I need to do today? And so doing that in both business and personal life has always been a habit. And that means that typically the way I'm spending my time, the effort I'm putting into something, the work I'm doing, it's really intentional because it's always tied to this longer term vision. So,
dude, that's awesome. I love that. Where do we find the Acquira team and what you guys are doing online?
Yeah, no, if you are a buyer looking to buy a small business, if you're a seller looking for a pool of qualified buyers, I'd love to talk with you. You can head over to acquira.com/intentional growth. And that would be ACQUIRA.com /intentional growth. Or feel free to always email me, Kylon@acquira.com, KYLON, and would love to chat with you.
May or may not be in a truck going to site to site in between buying companies.
Excuse the road noise. Yeah.
Kylon, man, this is so awesome. Have us connect again and have you on the show.
Yeah. Thanks for having me, Ryan. Appreciate it, man.